Hi, my name is Mike Helton, a tax shareholder at Rivero, Gordimer Co.
And I'm Kevin Bass, also a tax shareholder here at Rivero, Gordimer Co.
This is another filming of our YouTube channel, Beyond the Bottom Line. Hopefully you will click subscribe and like at the bottom of the video here. But what Kevin and I wanted to talk about is it's getting close to mid-November or December, and we're having a lot of year-end tax planning discussions with our clients now, both businesses and individuals.
Yep.
And we wanted to just put some information out there of some common things that people should consider between now and the end of the year. But first, there's been a couple passages, or at least one passage of an act so far.
Yeah, we did a video a couple weeks ago on the new infrastructure bill. If you want to go back and look at that, if you haven't watched it yet, there's some key stuff on there. I think we did the video right before it passed, but all that has come to fruition. And then also on the horizon is the Build Back Better, which we're waiting on that to get approved. So nothing out there on that yet. Once that's done, as we mentioned in our previous video, we'll put another video out on that as well.
One of the big pieces of the Build Back Better Act that's being debated right now in Congress is the state and local tax cap. So the cap on real estate income taxes, property taxes for individual taxpayers, currently at $10,000. They're trying to lift it to $80,000, but there's a lot of debate between the houses right now in chambers on what that number should be. We'll stay tuned and see what happens. But let's talk about a few things that's business owners. And remember, we do a lot of pass-through entity business owners. So you've got partnerships, S-corps, whose income flows through to the individual tax return. We're having a lot of discussions right now on what some things we should do between now and the end of the year. One thing we talk about is put property, plant, and equipment into place. So whether that's new automobiles, new computers, new furniture, things that you're going to buy now or need later, January, February, March. If you can purchase those now and place them in service by December 31st, you can get the expense for 2021. Again, we don't expect tax rates to really increase next year for our client base. So what you can get into this year, the better.
Yeah, accelerate those deductions now.
Yeah, another thing with method of accounting, talk about accelerating deductions, is some people don't even realize what method of accounting they're on. Businesses, accrual, cash. If you're a construction contractor, you might be percentage of completion, completed contract. You should know what method of accounting you're on for tax purposes. That identifies to you how you recognize revenue and how you deduct expenses and when, whether it's when received or paid as a cash basis, or when you bill or accrue as an accrual basis. So get with your tax preparer here at our firm to talk about those methods and what you can do to accelerate those type of deductions.
Yeah, one of the things we tell clients too, Mike, is even if you're on the cash basis, hey, well, if I don't spend the money, I don't get the deduction. Credit cards and lines of credit are a little bit different. You can spend those dollars, either owe the credit card company back or the bank back on the line of credit and get that deduction in the current year. That's a little planning tip there.
That's right. That is treated as paid, right? Yeah. What about employee bonuses? So we talk about, business owners will ask, I want to do employee bonuses. I want to give bonuses to my shareholders, to my partners, to myself. Make sure you check with your payroll company on the date that their hard cutoff date is. So many of the payroll companies have a specific date, whether that be December 27th, 23rd, 26th, that you have to call payroll in to get it into the 2021 W-2. So make sure you do understand that date and know what that target date is.
Yeah, and look at your profit sharing contribution. Make sure those are done by the end of the year as well, whether you're on bonuses to employees, give them the opportunity to max out their profit sharing, or obviously as business owners, make sure those limits are topped off by the end of the year. Yeah, because if that's something you had planned on doing.
Right, because profit sharing is based on compensation. So we see a lot of business owners pay small salaries throughout the course of the year and then do one bonus at the end of the year that allows them to fund more to their profit sharing and get a better allocation for themselves. So make sure you're looking at those numbers and having that discussion.
Absolutely. Mileage reimbursement, if there's any, if heavy auto use, whether it's the owners or the employees, make sure those reimbursements are done by the end of the year. Those are what's deemed an accountable plan. So not necessarily income to the employee or the owner if those are true business miles, but the deduction is taken by the business for those miles.
Right. And then the thing that we've been discussing all morning.
Yeah.
Employee retention credit. How do I account for that? So if you have applied for an employee retention credit, the IRS has given notification that the rule is that the receipt of that credit will offset the expense for the year the credit applies to, whether that be 2020 or 2021. So whether you receive that refund or not, whether that's just something that you've applied for and have not received, that can become an offsetting expense deduction or item for 2021 or 2020. We are having discussions with our business owner clients about that now and how to account for it and how to plan for it. So make sure that you're talking to us about that. If you've applied for or looking at taking an employee retention credit, whether we are helping you with that or whether your payroll company or some other advisor is helping you with that, make sure you bring it to our attention.
Need a plan for that for sure.
Right. So what about individuals? What are some things we can do with individual taxpayers?
No, absolutely. I mean, some of the things, the charity, a lot of the CARES Act charitable limits, they all went up to 100% of income. A lot of times it doesn't hit our working taxpayers, a lot of our retired taxpayers that could hit them. Those limits are still in play, or those limits are out of place for 2021, and which you can deduct up to 100% of your charitable giving. Those limits go away in 2022. So if there's some giving you want to do, maybe look at planning to do that at the end of 21 before the end of the year.
And with charity, that's cash or non-cash,
That's
right?
cash or non-cash, correct.
Yeah, I know I clean out my closets quite regularly and take things to Goodwill or Salvation Army. So
it's that time of year.
Make sure you get the receipt, though, folks, when you take that and drop it off.
Yeah. Mike mentioned earlier the real estate cap is $10,000 until Build Back Better changes that. So, look, make sure if you don't escrow your real estate taxes, see if those are due and maybe pay those early to get that deduction this year.
And in Florida here, you get a discount for paying a little early. So it's actually a win-win. So one thing I tell clients is review your pay stub to look and see where you're at with your 401k. Normal contributions for people under 50 is $19,500 this year. So look at your pay stub. If you're going to get another paycheck or two before the end of the year, or even a bonus by the end of the year, you may look to increase your 401k. That's a great way to defer income and get an immediate deduction is by putting more into your 401k. So make sure if you're not already maxing out your 401k or on target to max it out, that maybe you increase more to that limit before the end of the year. That has to be done through your payroll, though.
Yeah, and for individuals, look at your stock market portfolio, see if there's any, look at your unrealized gain and losses. Maybe if you have a lot of gains, we've had a decent year in the market, maybe there's a chance to sell some of those losers, if you will, to realize those capital losses to offset those big gains that some of our clients are seeing this year.
Right, and they are.
Yeah.
Penalty proof. People ask about when they need to make estimated payments. So the fourth quarter payment is due January 15th. Take a look at your prior year 2020 tax return. What we do is look at a calculation to be penalty proof for estimated purposes, which is the lesser of 110% of your 2020 tax liability or 90% of your projected 2021 tax liability. So you look at the lesser of those two numbers to make sure you've paid in either through withholding or quarterly estimates or some other fashion with a prior year carryover, an amount to cover those levels. And we can help you compute that to know what you need to have paid in either through a year-end bonus or with a fourth quarter estimated payment.
Right. Some of your other retirements, IRAs, those aren't, you can actually fund those up until April 15th. Health savings accounts, if you're eligible to do an HSA, take a look at that. That can also be funded until the original due date of the tax return, April 15th. Those are two good planning opportunities as well that you want to take a look at now, but you do have a little extra time on that. But that's something you want to start planning for now as well.
Okay, and thank you. And one last thing, I guess, on businesses I forgot to mention. Meals are 100% deductible now for 2021. Yeah. Entertainment's still not deductible, but meals are 100% deductible.
Right.
So make sure that you're carving out your meals from your entertainment in your general ledger accounts.
Holiday office parties, they're back, so deduct them. Those are 100% deductible as well if everybody from the business is included. The other thing, Mike, individuals, RMDs, required minimum distributions, are back. Those are kind of paused for COVID. And so you want to take a look at that, see if you have an RMD due.
Yeah, if you've got an IRA, talk to your wealth manager, your advisor, to say, hey, when do I have to take this? If you were 70 and a half in 2019, you have to take one now, pretty much for 2021 by December 31st.
Yeah.
If you are turning 72 after or 70 and a half after July 1st of 2019, I think there's a rule that allows you to extend that into April of 2022.
Right.
But make sure you're talking to your advisor to see if that applies to you at this point.
Yeah,
Good point.
No, absolutely.
All right, that's it. Call us if you need us. We're having discussions with some of you, but if we're not, please reach out if you have questions, and hopefully this was helpful. Happy holidays.
Thank you. Happy holidays.